All right, so this is my review for Monday, January 12th, 2026. I know I said I wasn't going to trade today. I told Luca that I wasn't traded today, but in the end I did trade. So, let's start with what we missed, right? So, as this was already put in a game plan that I did over the weekend, and I did a video about it and shared it with Luca, and the metals were all ready to break out. So we have um, so this is the open here, right? The open, the Sunday evening open, and we had let's go to 5 minute. So we had this here ready to break. I'm sorry. After this, so this is already well, this is higher time frame. This is zooming out and giving us more context. We are already breaking out a pretty important structure here on a higher time frame, but into the basically the close of the day, we had this bit of structure here, and we had this like kind of fail, but then it was saved here, retraces back up, and it takes out the volume point of control of this structure. And that's exactly how it's looking into the close, waiting for the Sunday from the Sunday evening open. So this is it's a beautiful breakout pattern, but what gives um, what gives it a lot of more edge is that it wasn't only gold, it was all metals. All metals. Silver was in the same sort of position here, um, ready to break out as well. And we had palladium. You can say that this move was a little bit tamer, and platinum. I haven't checked how these moved. Platinum, I guess it sort of did as well, but now it's hitting here the top of that higher time frame trend line, but it did break out here as well. So, anyways, all these things were ready to break out, and then we had oil as well. Um, ready to break out, and then all coincides um, with all the all the headlines over the weekend that geopolitics and stuff. So that was basically why there was so much edge on that. Trying to get oil. Oh, this is oil. Okay, so much edge on that for that open. Oil also like broke out of this structure here, but then now it's sort of ranging between these lows here and the highs. And but so I missed that, and and then what we get is pure chop. Oh, and equities. Well, we're after the initial gap to the open here, they sell off, right? Um, and I miss everything because I arrived late to the desk, and this would have been here. I mean, 700s, the low 700s was like, which is here, which was like a key area, and this is kind of like chopping around and bottoming into that area. Um, so on a higher time frame, that it dips below and then it gets spot up. But basically, this is the bottom. So this was perhaps sort of not surprising that we get this huge gap up here into the high that we put in here. It's testing again. It wants to test again the 26,000 um, level that it almost tested up here, but it tested it before. So um, the real momentum here happened here very early while I was asleep, so I didn't catch any of that. So um, having missed everything, then what did I do? What did I choose to do? I went back to, and this was, by the way, this is still equities are still trading very thin, super choppy and kind of unpredictable, very algo, ridden because the volume is just not there. So um, I was watching it here and it looked very difficult to trade. It was just pure chop when it got down there into those areas here. And this could have this here momentum, for example, this could have been maybe um, within my system is testing here the low 700s. We get exhaustion candle, traps here, and then puts in that final leg into the low 700s, but it overshoots by a ton and it goes into the mid 600s. That would have been an amazing trade, but it looks very easy to do here. But guess what? This was already here. It was already testing the low 700s, and it never really gave us that move. It's just chopped around and chopped around and chopped around. It would have been very difficult to trade. So knowing that that's what's happening, knowing that I missed all the trades with Edge, the breakout trades with Edge with real momentum, then I fall back into the other thing. Okay, if I cannot trade momentum, then wait for a consolidation, wait for defined levels with a real just defined range, and and scalp the range. But you need to have identified like um, an area where not just the levels are well defined, but the dynamics of the tape are easy to read, and there's a flow to the tape. And this is what we got here, basically. So I made all my P&L here. I may have put on a trade, I guess. Um, Actually, I think I did after the open here. I may have scalped a couple times this range here um, before it broke out of the range and then continued higher. And basically, the main point here was to be aware enough that when it's breaking outside of range and you're getting momentum, which is not tradable according to my rules right now, but then you need to stop scalping. And I was pretty good. I think I was involved here, and I was pretty good at stopping that. And then when I got involved here, I traded this until it was over. And when it was over, I actually attempted a couple of times more, and I lost some P&L that I later recovered here. Um, so basically, that was the point of today. The point is that you're not. I was there's no. I was not trading direction. I was scalping consolidations, and whenever it was not a consolidation, you had to understand that was happening. In this case, we were taking the bottom of the range here, and you need to stop trading. um, in this case, because we break below, but then it was saved, and then there's a momentum move to the upside, we get this exhaustion here. So then I switch to that momentum trading just for this because I saw it. So instead of scalping, like fading the edges of the range, in this case, momentum, trapped, and then it gave us this little pop here. And then again, stop. I stopped trading. Then I think I may have tried to scalp here a couple times, and I was like I made some, lost some, break even, and then I see this thing starts compressing, and I'm like, just leave it alone, and that's about it. And I'm not touching it again, at least for now. So, or I'm actually done trading today. So, um, so there was probably there was a range that could be scalped here, but so and here when it starts when these candles get really compressed and they get really like this and it starts more like a grind with aimless and it looks like it's melting up, but maybe it finds the top and it stops going back down. But with this kind of stuff, don't even get near it at all. So um um I guess the lessons for today is that I did get pretty close to my base hit, which is 800 and I can't remember. I think it's $860. I was like at like 700 or something, and then I ruined it by giving back some when I tried to keep trading it after we broke out of that range. But then I made it back with this momentum trade here. I'm still below the base hit, so I did make in P&L it's okay, but the balance it's only above just above 500 because I did make a stupid trade on gold and I lost $300 there. Um, it was a random trade, so I wasn't all that good and staying disciplined and not trading random shit, but for the most part I did. I was pretty good, except for that trade in oil and sorry in gold. So um I'm glad the way I was in tune with the tape and how I was reading the tape very clearly here, and I was like not hesitating and waiting for that moment where I saw that range dynamic, acceleration on the tape to fade, and I wasn't being too early and I wasn't hesitating, and that's why I was capturing the moves, so that was okay. And I did it with small size, also good. I kept my lots at only 2 contracts per lot. I was using 3 to 4 lots. So um, everything good on that end. And then um, gold seems to be like rolling over here right now. And also oil seems to be rolling over. So there's nothing else to trade here right now. So then quickly as an aside, this is a good opportunity to sort of um, uh, um, kind of summarize really quick what is in my system or in my playbook, what I consider the different types of easy money trades or layup trades that I'm going to be using to pass this account. And again, the important thing is to identify the market environment and identify if there's a bias or if there's directional, a reason to commit to a directional move or not. And we had that at the open, but I wasn't trading the open because I was asleep. So, um, so I missed all those setups, all those trades, right? So, I'm happy with the way I switched to, okay, so you missed all the trades with edge, then you go to just scalping mode and look for those ranges and consolidations. So that is one type. If I identify that that's the type of market that we're in and that's what's going to work, that's what I'm going to do. And the important thing is that I am able to identify the exact spots where that can be done safely. And when I know that it's not working anymore, that I need to stop trading immediately, stop pushing it. Um, um, if we were in a more directional or in something where that's giving us a bias to one side or another and we have momentum moves, then I would switch to what I did here, which is in this case we had it, but we had it only for a brief moment where we had a real momentum move to the upside, taking out that VPUC here, bam, 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 kind of sort of like breaking out. Um, I saw this as a failed, breakout from it breaks to the downside, but it gets saved, it traps, and then goes to the other up to the opposite end, basically to the top of that range, and then it's sitting there with and creates a little bit of structure after having taken out the highs. So that's like the momentum side. And I took that little bit of momentum and it was immediately clipped, by the way. So it's not that it ran or anything. Um, this is a mode that equities are trading in, at least during the open. So um, may have to do with options again. If we're in a long gamma, if market makers are long gamma, it means that they're not letting these momentum moves run. They're very, they're always hard there on the offer or on the bid on both sides of the book. And that's why these ranges form, and that's why these ranges are fadeable. So this little bit of momentum here, that was maybe it was fortunate. That's the only thing that it gave in terms of that. If we go back to after the open, it's a different story. Obviously, I wasn't there, but um, there, what the fuck is that? We get a gap down here, and then we sort of see real momentum move. Bam, momentum here, bam, momentum here, before it gets down to this area. So those would have been, if I had been there, those would have been traded with that sort of technique because it would have worked. So it's important, again, to identify what market environment or market regime we're in, so we don't make the mistake of trying to apply a specific type of trading or technique in an environment where it's not working. So that is the first differentiation there. So those are the two types, I guess, of inequities, mostly, of like types of layup trades or easy money trades, um, that it's acceptable to be taken in this account. After identifying the type of market, it's either going to be scalping a range by fading the top and the bottom of the range, or taking those little trap after exhaustion for an entry for a momentum move. And those are the two types. Um, the third type, I guess, falls into the category of those breakout patterns that we have on gold and silver and all the metals last night. So, and these are basically um, breakout patterns. So, if we have very clean, like in this case, I don't know where my drawings went, but I had drawings here. But if we have clean wedge patterns showing that they're with a very strong volume point of control, like this one, um, and we have, just like it happened in oil yesterday, we have, if we zoom out and we have like a confluence of technical patterns. In this case, this was breaking out of a higher time frame wedge, and you can see that here. I don't know why my drawing is not there anymore. Um, so this is like A plus that. So higher time frame breakout, consolidation up high and above that higher time frame breakout. Even if we zoom in further, like failure of the wedge, flush, but then soaked up, flush, and then reclaim of that VPOC. And the most important part of it, which is, the fundamental catalysts or the geopolitical stuff happening over the weekend. So all these things added up, and all these variables stacked up are what make an A plus setup. And this would have been this was an A plus setup. And um, um, these are trades that you build, that you sort of piece them together and construct them, and they take time to set up. And when you see that perfect setup, that is a layup trade. So the previous two types of trade that I mentioned are in a regular market. You kind of identify whether you have some momentum or you're going to be scalping range, and be very, only just try to be very precise, and not get into the over trading territory, and that should, and not have expectations of a high PNL. And today I actually pushed it a little bit too much. I didn't even have to go near the base hit, because that's going to be difficult on a day like that, in the absence of A plus setups like these. When you have an A plus setup like this, it's a breakout setup, and especially when where there's a fundamental catalyst behind it, then well, that's where you concentrate everything on this setup, and that means you get if you got stopped out, um, you know, just manage your size so you have several attempts. If you get stopped out, you can get back in and so forth. You can take a few paper cuts in order to capture that move that you know is going to happen. So this is the other type of trade that is acceptable to trade to take in this account that will move the needle. These are actually obviously the best ones. The other type is a momentum trade, but it's momentum into. So imagine here, for example, that I had missed the breakout and I had missed this. And again, the way of trading this would have been, well, if you're there at the breakout area, you have to be, you have to like kind of wait for that first exhaustion candle, confirm that it trapped. That would have been this one. Confirm, in this case, this was a gap, so I guess the gap gets sold. But then when the gap gets reclaimed, then that's where your long starts. This is the first real like exhaustion candle that I find here that I would have used. Bam, momentum, exhaust, and stays up there and consolidates right after that exhaustion, and that's like a good long entry for the rest of it. We perhaps get the same thing here when it traps here and then momentum here. I don't see the exhaustion candle, but anyways, but also zooming out, like when you zoom out, because this is a higher time frame setup, you kind of have a target area at the top of that wedge. So um, because we have a higher time frame pattern, so I would have found a way of holding most of my size into this area. But if I had missed this and we have a target area here, what I would have done is we identify not so much the top of the range, but maybe the strongest volume point of control near that area, and just call that 4,520. And then um, so 4,520 is around. No, that can't be accurate. What did I just do? I mean, it's 4,580s is like the top of that wedge. So yeah, so you're okay. So let's call it 4,560s is what I see here. And okay, and 4,560s. Now going into the 5 second would be around here, I guess. Around here. So then if I had that area in mind, and then obviously we have the 4,580s also, but let's say that I had aimed for the 560s instead of 580. So here, well, if I had missed this whole move, I would have, if this thing is if we get an exhaustion, and then we see one here, this exhaustion candle, which could be like the exhaustion of this trend upwards. It kind of like, bam, exhaust here into 4,568 appears. It appears to be 569 or something like that. And that's the first exhaustion that we get. And we're exhausting into that target area. This is I think it's probably the best little technical pattern that I have that always works, and is that after that exhaustion, if it's into that target area, we're always going to get trapped and then a second pop into the area. So this would have been, like a 8 to 10 point move that is so easy to capture that here you really size it up to capture that. And then on a higher time frame, it looks like, it's so that's where we kind of started around over, and this was where I would have thought it was going to die, but then it trapped, and then trapped here above this, just below this high, and then it put on the next leg upwards. So um, so that's also like an easy money layup trade for me. Um, let's see what other type of trades. Um, can go into that. Well, and then we have to include then data releases, and because they have to be included because they're like literally like cheating. Like if you for example, the non-farm payrolls or the unemployment data or whatever, if the market's going to move, and I use that technique that I've been using where I put on the two stop orders on the other side. That one counts. That one counts because that's also like a layup trade, and it's instantaneous. So it takes out all the uncertainty and it takes out all the variance. So I'm probably missing a few things because I know I have another few tools in the shed. I just can't remember them right now. Um, well, okay, so obviously the other, and we saw it happen here. The other little technical pattern that always works. Again, it doesn't mean that it has edge in its own, and we can't use it in isolation. But if it's within a a setup that has edge because it has other variables stacking up, this is really powerful, and it's basically the one where we have a wedge breakout setup or pattern, and it fails, and then that failure is saved, and then the VPOC of that pattern is reclaimed, and that is very powerful. That typically results in a breakout. If we have a higher time frame pattern playing out, then there's a lot of range to that breakout. If we don't have something like that, then it'll be maybe a short-lived breakout, but it always pops. So and obviously all these things work. They work to the upside, and if you flip them, they work to the downside too. And all right, that's about it.